Hello and welcome to HYCM's online trading workshop with myself, Giles Coughlin. I'm a currency analyst and I'm going to be taking you through the next hour, looking at how to apply fundamental and technical knowledge to the market. Just before we get going, I'm just going to do my usual, which is making sure that everyone can hear me. So if you can hear me, please can you let me know that you're hearing me all right? Yeah, hi Joseph, hi Van, Nadir, great. Thanks for letting me know. I guess I'm coming through loud and clear. Yeah, that's super. Lovely. Right, as folks are coming on, I'm just going to leave this disclaimer up, and all this is doing is making sure you're all understanding that as we're talking through the different setups, the different market news, this is not trading advice. The idea of this workshop is exactly what it says. It's a workshop, so it's trying to introduce the ideas of understanding fundamental knowledge and then having some experience with, putting some things into practice yourself, and in order for you to educate yourself so you can make your own trading decisions. So that's the whole idea of everything that's going on throughout this hour. So as we get going, let's first of all look at the outline of the session ahead. We're going to be looking at the handout that you should have. So if you go to the bottom of your GoToWebinar control panel, you should see it says handouts. And on the handouts there, there's a workshop guide for the 8th of January. You should be able to see it. It's under handouts. It says 1 of 5. And if you just click open the handout, you should have this should turn up, okay? And the whole idea of the handout is this is a resource for you to take away and use day by day in your trading. I've designed it to be simple and straightforward to use, but certainly useful. So it's tried to get that balance of simplicity and practicality. So all you're going to be doing is using it, and we're going to be going through this during the workshop today. We look back, we look forward, look at the charts, look at your risk, and then we review by looking at the outcome of our trade. And we're going to be referring to and using this during the webinar. So make sure you have it open, and also make sure that you have your demo accounts open. If you're trading with a demo account, especially when you're practicing and learning new things, it's important that you use a demo account. So open it up and make sure you have it, because we will be referencing it during the session ahead. It's good. We've got the handout for session, that's great. And also to say, please do email suggestions for topics to this email address. Thank you to those who have email suggestions. And just to let you know that your suggestions are being put together. And during the course of this year, we're going to be working through those suggestions and answering some of the questions that you really want. So if there's something you really want to have covered, just email to the suggestions. And if your topic hasn't been covered yet, don't worry, it hasn't been forgotten. And we'll be looking at covering the most relevant topics for us as a group. So if you want to email suggestions, do that to the workshop at hycm.com. That's the email address. Send it there, and all those messages come through to me. Welcome, guys. Just some of you guys who have just joined. Don't forget the workshop guide, which is under the handout panel, just under handouts. We'll be referring to that shortly. The extra session that we're going to be doing today, the topic that we're looking at is a topic that many traders, specifically beginner traders, really sort of get hung up on, which is how many trades is an adequate amount to be taking each month. You know, what's an adequate frequency of our trades? Now, many beginner traders get caught up on this because of wanting to know, well, how much profit can I make? So we're going to be answering that question and giving you some guidance to know what you should be expecting. And we'll be covering that during the end of the session. So without further ado, if you all open up your workshop guide, it's underneath the handout section, and you should have it looking like this. Level Up Online Trading Workshop. That's the special topic we're doing, adequate frequency of monthly trades. And we're going to be starting by looking back. Okay. So there we go. And don't forget as well to use the question panel. Okay, we'll be using the question panel, which is opportunity for you to ask questions. And I've got that open in front of me right now. So any questions that you do ask will be there, and I should be able to reference them, and we'll try to get through as many questions as I can. So don't be shy. I don't want to think of you confused or not understanding something. So just knock a question out, and we can try and get that answered for you. So the first thing we do, we turn to handout. The first element, as soon as you come to your trading desk, before I open up any of my charts, I'm looking back. You see in the handout here, looking back. And what I'm wanting to do, I'm wanting to identify the recent sentiment by reading up on the last two sessions. So sentiment simply means the mood of the market. It's going to help you a lot if you begin to think of the market as a person. And what I mean by that is a person has moods. So if you have someone you love, you can tell the mood of your spouse, you can tell the mood of your father or your mother, or you can tell the mood of a relative or even of your children. You get to know them well, and you can tell whether they're in a good mood or in a happy mood. So what we're trying to do, as soon as we come to the market, we're trying to think, what mood is the market in? And the way we work out what mood is, and you can't just look at the market and see what kind of mood it's in. You have to read to see what's the latest news that's been coming out, and what is the market focusing on during this current session, because that gives us a clue as to how to identify the relevant currency pairs for trading, because not all currency pairs are good for trading at all times. There's certain times which certain currency pairs have a greater chance of moving in one direction rather than the other. And they're the currency pairs we're trying to identify. And the first way we identify that is by trying to identify the recent sentiment by reading up on the last two sessions. So I'm going to run through that with you now. This is, as it were, a worked example. You know, it's always easier, isn't it, to see someone work and show what they mean by what they say. And this is what this workshop is doing. I'm going to be showing you how I identify the recent sentiment in order to get a bias as to which currency pairs we're looking at. So we're now just coming in to the start of the US session. So we want to look back at the last two sessions. I'm going to go back a little bit further. We're going to look at the US session from last night as well, because it's going to help us with the US dollar, because there's quite a lot of change and variations going on for the US dollar at the moment. So it's important that we have an essence and a grasp of what's going on. So first of all, going back to the US session yesterday, we had the ISM non-manufacturing index came up, and the result was 50. Oh, let's get rid of that fella. It's 57.6 versus 59, and that was a fall in the non-manufacturing index. So that is negative for the US dollar. And the new orders, however, were just a slight uptick of 62.7 versus 62.5. So that was a bright spot in the data index. So basically, you kind of had a little bit of bad news, a little bit of good news for the US dollar. But by the end of last night's US session, the US dollar index was down. It was down nearly 0.5%. So there was general US dollar selling. Now, the big picture of why this is irrelevant is that this data point normally comes out before the non-farm payrolls of last week. Now, the non-farm payrolls, as we covered on our Monday session, had a really fantastic print. Over 300,000 new jobs added, wages were growing. It looked really, really good. Now, this was coming at a time when Jerome Powell said after the jobs report that the Federal Reserve was listening to the market and there was a sense that the Federal Reserve was going to be slowing down the path of rate hikes. So that's why on Friday we saw the US dollar bought and then sold within a few hours. It was those two different elements the market's trying to grasp. Was the non-farm payroll just a kind of a one-off, the end of a lovely summer of US economic growth, and now Jerome Powell's bringing it back down to earth? That's what the market's trying to gauge and wrestle with at the moment. So this data that came out on yesterday was always going to be viewed through that lens, and you can see that it's down from the highs of 59 from the previous release. It's down at 57.6. So the non-manufacturing index was falling, and so the market as a whole took this as confirmation of the more bearish US dollar outlook. So that's why we had some US dollar selling. But the thing to really be aware of, and this is something you can't avoid, obviously there isn't sometimes things aren't always black and white, and particularly in trading, traders are always trying to see what is the next move, what's happening. And so the US dollar, in my view, is at a kind of crossroads, and the crossroads is either the US economy is going to continue to grow. So you have those really good jobs numbers. We've got concerns about global growth. Maybe the US-China trade war is going to be resolved, and maybe US growth can carry on. That's one possibility. The other possibility is that US growth has run its course. The Federal Reserve should tail back its projected rate hikes of it was 4, gone down to 3, possibly 2 rate hikes now. So there's a backtracking, and the market's trying to understand what is the position for the US dollar. The bottom line at the moment is its US dollar weakness. Okay, that's what we're seeing, US dollar weakness in the markets. Later on in the US session, we also had an interesting remark from the European central banks, Hansen, who said that crypto assets are nonsense, and he said, and Bitcoin will die. Obviously, Bitcoin is got a lot of media attention recently, so this was just something that was worth pulling up for your guys' information. I don't know if you how many pages in the workshop? Joseph, it's just 1 page in the workshop guide, so don't worry if you just got the 1 page. The whole idea is that the workshop guide is 1 sheet that you can have by your trading desk. There are other sheets and programs that we've done, but this is just a crib sheet to remind you of the key things. I hope that's clear for you, Joseph, okay? So this was a comment on crypto nonsense, and there's concerns that the bubble has reached and that it's just going to be all falling from this perspective and this point on in time. And if you look at the cryptocurrency, here's Bitcoin, you can see it's fallen from the Christmas of last year when it was nearly $20,000 a Bitcoin. It's fallen down to now $4,142. You can see technically there was a breakout of this falling wedge. There was a strong breakout to the downside, falling down to the 200 exponential moving average, and then we have price just nudging up to the 200 exponential moving average, but not breaking above it. So in terms of near-term price will have to go above the 200 exponential moving average before the next line of resistance would be that 100 exponential moving average and the $6,000 mark. That's a clear sort of horizontal line of resistance. So they're the kind of key levels that are going to be in play for the rest. But it's just interesting to have that comment out of the European central banks, Hansen. It's not particularly of weight, but it was more of interest. Now, what else also came out in the US session yesterday was that Saudi planned to export cuts of 800,000 barrels per day from November levels. Okay, that was a report that came out yesterday, and that's obviously going to influence the oil market. Let's see if we've got an oil chart here. Let's have a look. Well, we'll come to that in a moment. Yeah, I'll just, for simplicity, I'll just show you the US chart here. So here is the US oil chart, and this was the result as it came through. Let's see. I think yeah, I have it here actually. This was the news as it came out. So the way this would influence the oil market is that if the Saudi Arabia cut their exports of oil, it means that the price of oil is going to go up, because if there's less supply in the market, it means that the price of oil is going to increase. Okay, so this is why this was of interest to the market. Now, I was just around at my desk at the time, and yes, Sol, sorry, there's a recording of the training today, and that can be found on the HYCM webinar. You can get these webinars recorded. Okay, so just going back to the news out from Saudi Arabia. Yeah, the link. Yeah, it's hang on a minute, Sol. I think someone from the support team can give you the link, Sol. If not, I'll just remind me at the end of the webinar, and I'll send it across to you, Sol, if that's okay. Yeah, okay, cool, great. Okay, so Saudi Arabia, they cutting the oil exports to 800,000. So that was new news. It was an increase of export cuts. Okay, so I was at my desk at the time, and I remember price was just nudging up to this pivot point, this resistance 1 pivot level, and I thought, well, that's potentially a very good place to go long. And so I just went long as price broke out of that pivot level, and I was looking very carefully at the 50 mark. Now that was a really key, it's a really big number and a really key psychological level. So I was looking carefully into that, and then I drilled down into more of the details. And what I reminded myself, I looked back and to see what was their original exports cuts. What was it originally meant to be? And it was originally meant to be 7.3 million barrels per day. So they were just increasing that reduction to 7.1 million barrels per day. So okay, it wasn't export cut, but it wasn't a big one. You know, it wasn't massive. So I closed my position out for a small profit. Thought sometimes when you're headline trading, you've got to just take the profit when it's there. Just took a few points and left it at that, because I saw the export cut, the headline looked good, and often you'll see traders reacting to the headline, and then you're looking down into the detail. Well, what does this actually mean? And you can quickly see it wasn't much of an export cut, but nevertheless, that came out. So that is going to be adding to oil's bid. Oil has been bid up in the last few days, and it's been approaching that key psychological level. So that's just worth putting into your mind. Okay, just realizing that. And we also had the Canada's IV Purchasing Manager Index for December. That came out increased at 59.7 versus 57.2. Now the Purchasing Managers Index, they basically provide really good information on a country's manufacturing sector. So it gives, you know, it's a survey of key data points: inventory levels, new purchase orders, economic labor conditions, and these kind of factors. There's about 4 or 5 factors that comprise this index. It just gives a general picture of what the manufacturing is looking like for a country's overview of their economy. So that was for the Canadian economy. So that was increase. So that's worth just recognizing that there was some strength there for the Canadian dollar, because we have increasing oil prices. We have that underpinned by some news out of Saudi Arabia that they're cutting exports, and we had a positive PMI data out of Canada as well. So that's just okay. We've got some gentle strength coming into the Canadian dollar, worth recognizing. Now moving into the Asian session. In the overnight Asian session, what we had some speculation that the UK would withdraw from the EU, that would be delayed. Okay, so just to fill you in on the picture here, Britain is leaving the European Union. It's called the Brexit negotiations, and as part of these Brexit negotiations, there's something called Article 50. And Article 50 is basically the drop-down deadline for the UK to leave the EU, and that's currently set for 29th of March. However, there was some speculation that maybe the UK would delay withdrawal from the EU. Now, Theresa May has a considerable difficulty getting her deal through the UK Parliament. And what's that meaning is that she's running out of time because she has to get the deal voted for by UK Parliament and agreed before the deadline of 29th of March. So literally time is running out. So the question from this point is, what is Theresa May going to do? Because at the moment, her UK Parliament looked like rejecting her deal again. So then the speculation was that, well, maybe she'll look to extend the negotiation. Okay. However, it wasn't much longer, and just a few hours later, a spokesman came out for the Prime Minister saying that Article 50 would not be extended and Britain is leaving the European Union on the 29th of March 2019 this year. So that was quickly, dismissed. Now, just to help you guys put this into a bigger picture, now with Britain has received some legal advice on what it would mean if it did extend Article 50. Okay, and basically the advice is that if Britain did extend the Article 50, it would mean that British MEPs would have to be sent to Brussels and they would have to take part in European Parliament elections. So you can see that there would be a ridiculous scenario where British MEPs are voting in the European Parliament elections when they're actually leaving the European Union. So it would be a very, very odd situation, and so odd that it means that the actual time for Britain to leave the EU in a kind of acceptable way, and according to this legal advice, was July the 2nd. Okay, so that is a hard deadline for extending Article 50. So in other words, what this information is telling you is that if the extension is given, and say Theresa May does go for that extension, that is going to be July the 2nd, looks like a legal hard deadline for extending Article 50. There's nothing to trade on with that, but it's just helpful to know what limitations and what difficulties Theresa May has in terms of that. Yeah, Sol, that's right. So if Britain left the EU on the 29th of March and no deal was accepted by the UK Parliament, that would be called a no-deal Brexit. And that is seen as a very bad short-term reaction for the pound, and you would see about 10 to 15% fall in the pound given a no-deal exit scenario. So that's just worth bearing in mind, okay? And obviously Britain is trying to get a deal, and that's the problem. We'll cover a little bit more on this later on during the session and give a little bit more information. Now we get to the London session and we come to another economy that is struggling a little bit, and this is the Eurozone. Now this has been, there was some data out for consumer confidence out of the Eurozone. This is December's consumer confidence, and you can see that it came out at 107.3, and you can see that actually that is going down to the lows of December 2016. So it's some of the lowest consumer confidence in the Eurozone since December 2016. So it's a significant drop there. And one of the things that, yeah, so that was, I'll just move that out of the way, that's it. And one of the things that was noticed about this Eurozone consumer confidence that came out this morning in the London session was some of the details. So there was drop in confidence from France, that fell down -2, and this was largely on back of the Yellow Vest protests. If you've been following the news and the geopolitical events, you'll see that this Yellow Vest protest about fuel prices in France had a huge impact on the French economy, and it hit consumer confidence negatively, given a very negative feel across France. So you can see that reflected in the consumer confidence. But it wasn't just France that had the drag on the consumer confidence. It was also Germany was down 1.9, Italy was down a further 1.4, and you had Netherlands and Spain going down -0.3 and -3. So when you put that together, okay, what you see is that In December 2019, Mario Draghi made some GDP projections, okay, and he revised them down just a few weeks ago to 1.7% from 1.8%. So in other words, the European Central Bank, and remember, a central bank always wants to provide a clear guidance for market participants. It's not trying to trick market participants. It wants to have a smooth currency price. Okay, so one of the key roles of any central bank is to smooth and try to take out as much volatility as is possible for a currency, so that businesses have a strong sense of knowledge of where the currency is. Okay, you can think if you're doing business in different currencies, you've only got to travel a little bit and you know what difference the exchange rate makes to how much you can spend on holiday or how much services cost. And it's exactly the same for central banks. They want to give it smooth for their businesses. So this is what the ECB's Mario Draghi is trying to do. He's saying, okay, we're projecting that we're going to have a less gross domestic product next year. We're thinking it's going to be 1.7%. So what that means is the latest data here, it doesn't bode well for European growth, saying the consumer confidence is down to a low not seen since December 2016. Okay, and so this information is going to mean that the growth prospects for the Eurozone are going to be shrinking. At present, the ECB, European Central Bank, is expected to hike rates once in the summer of 2019. So this is the question now. At what point does the market say, well, European growth has slowed so much that we start to price out a rate hike next year? Okay, that's the question. And that's the question that this kind of data is raising. So this is a kind of a bearish outlook for the euro, particularly in the medium term. I mean, that's the medium term question and pressure that's on. So that's sort of an interesting story that's come out from the London session. Okay, so we've got to bear that in mind. We put that into the pot. And remember, this is a bit like cooking. You put all these different things in the... Okay, Sol, question from Sol here. Do I think the Eurozone might crash because it seems that most member countries are almost bankrupt? Well, so what your question does pick up on is there is a lot of concerns out of the Eurozone. So some of the concerns at the moment, obviously Brexit, Britain leaving the Eurozone. We have a slowing growth, consumer confidence across the Eurozone as a whole. We've seen some slowing orders out of Germany. We have the Italian debt issue, which has been growing and has been in the headlines a lot. So that's obviously a question that people are always asking is, does the Eurozone have a future? I think it's too early to be, thinking certainly a sort of short, medium term, will the Eurozone crash, Sol? I'm thinking, no, I don't think it's likely to crash in that spectacular short way, but stranger things have happened for sure. But I'm looking, as you're looking at the data and the growth, there is still growth projected. It's just slowing. So at this stage, I think it's what we're looking at is what impact is this going to have on the euro? Okay, and at the moment, these kind of data points, slowing growth, falling consumer confidence, less factory orders out of Germany. And remember, Germany is the largest Eurozone country, so it has a disproportionate effect on the euro. And what this essentially means is that the Eurozone is slowing, and so we're looking at potentially selling the euro. That's a weak currency. And particularly what we're doing now, we're trying to identify what are the weak and the strong currencies by the sessions, okay? And that is just helping us to fill that picture in. Now, we return to... Well, okay, so that's sort of a debatable question, and but you're wrestling with the right issue, Sol. Exactly, trying to understand. You're always trying to look at what's going to happen in the future. So, Sol, you've got that basic concept of what we're looking to do. Yeah. Okay, I hope that's clear. So, good. Okay, so going ahead, looking to the next scenario. This was some data that came out in the London session, and it does go to illustrate how sensitive the pound is to headlines at the moment. If you see this large candle here that was just opening here just around the 100 exponential moving average on the 5-minute chart, and we saw this spike of nearly 50 points up to a nearly 1.28 level, probably just clip that just underneath. And that large spike was based on this report that the European Union is willing to give written assurances on backstop. Now, the heart of the problem, and this is the problem, is that Theresa May has come back from the European Union and said that we can have a deal with Europe. This is what it looks like. The problem is the British members of Parliament said, well, hang on, part of this deal means the backstop arrangement with Northern Ireland can go on indefinitely. In other words, it might go on and on and on. Theresa May has said, no, no, no. The EU does not want the Northern Irish backstop problem to be unlimited. So what the British Parliament said, well, go back and get them to agree that it's not going to be ongoing. And the EU have said, we're not going to give you any legal assurances of that. We'll just tell you that we don't intend to do it. So Ireland, as Prime Minister, has said that the EU are willing to give written assurances on the backstop. So the initial reaction was a quick buy in the pound, but that doesn't change anything. Because, and the best way to understand this, it's a bit like, imagine a man and a woman, okay? And imagine a man and a woman, they come together, and the man says to the woman, I would like to marry you. And the man says, and I want us to live together and share our lives together. And the woman says, great, I'm really pleased you want us to marry. So why don't we go and get married? We'll do it publicly in front of all of our friends and our family, and we'll do it legally so that we are legally recognized as husband and wife for the rest of our lives. And the husband says, oh, no, I don't want to commit to it legally. I just want to tell you that I intend to be married to you for the rest of your life. Okay, so of course, would you have suspicions if you were trying to marry someone like that? Yes, you would have suspicions, because you think, well, if you really intend to marry me, then you would surely want to make it legal. And so it's that kind, I mean, it's not exactly that idea, but it's that kind of idea that's going on. And so that's why the pound rallied and then sold back down. So when you see written assurances on the backstop, it doesn't actually mean anything, because it has no legal, so interesting, yeah, that it has no legal backdrop to legal credence to it. Okay, so and Ireland said that if UK asked for Article 50 extension, Ireland would not stand in the way. It's just interesting, this Article 50 extension is being brought up again. The Prime Minister May has denied that, but it's interesting, it's coming up again. Okay, so sometimes there's an old saying, isn't it? There's no smoke without fire. And sometimes you'll continually get things mentioned over and over again, but it won't always necessarily, materialize in the way the headline says. So just be aware of that Article 50 extension. And this shows a wider issue that Theresa May has, is that she's not exactly sure on what Brexit is meaning. So the official date for the vote for the British Parliament is the 15th of January next week. Okay, but and the debate is due to start tomorrow, but there's debate even about what are we debating on, what are we agreeing to a vote on. So even the idea of what Brexit means, as this funny comic tries to illustrate, is that it's very uncertain, and so the whole negotiations are uncertain. And so what this means is there is a distinct possibility that Theresa May is going to have to postpone this vote again. Remember, before Christmas, and I remember this because I was due to take a workshop for HYCM, helping beginning traders understand market dynamics, and I thought, wow, what a day we're going to have, because this is going to be the vote for Theresa May's Brexit negotiations, and it was postponed. And it was postponed. The date is now the 15th of January, but circumstances haven't really changed. So when you look at it like this, Theresa May doesn't really have many options on the table. it's starting to get very hard. So what this means is medium and near term, the pound is likely to be sold because there isn't a clear way through, and there isn't an easy option for Theresa May. And there's going to be headline trading as someone says this and someone says that, but the big picture is that there's nothing really to help Theresa May get this through. Now, the deal may go through in the end, but at the moment it's looking very unlikely that there's going to be a meaningful vote on the 15th of January. So that idea of an Article 50 extension may come into play. So that's what we need to look at. Also in the London session, we've got the US-China trade talks extending into an evening of a second day. Now, this is an important event. One of the bigger concerns of the market coming into 2019 is global growth. Okay, that's the big picture. Is there a slowdown in global growth? We've seen equity markets falling heavily. We've seen a concern about the US economy. We've seen a concern about US-China relationships. We had some report from Apple that their consumer products were being less bought in China. So is there a slowdown in the Chinese economy, slowdown in the US economy, slowdown in the global economy? Okay, so that's the big concern. So one thing that could mitigate that concern is if the US-China trade talks went well. Now, there's a lot of optimism going on about the trade talks from the Chinese and the US side, and it's in no one's interest. It's in no one's interest at all for this to carry on. Now, obviously, Donald Trump, he really wants a strong S&P 500. In fact, he pretty much gauges his success by how well the S&P 500 are doing. So with the S&P 500 having fallen, that's the US equity index, Standard & Poor's 500, so much in the recent weeks, he's going to be concerned. And he's going to be wanting to try to make a deal because he wants to see the equity markets rise because he marks his kind of premiership, his leadership partly by it. So these trade talks that are happening now, this is data just out before I came, just half an hour before I came onto the workshop, is going to be important. So that's something to be aware of when the second day of US-China trade talks. So there's potentially red flag. Yeah, red flag here is that there's US-China trade talks going on, and the resolution or non-resolution of this is going to have a reaction within the market. So this is just something to be aware of, okay, going into the situation. Okay, we're going to go now into looking forward, okay? So we've looked back. So by now, we've got a good idea of what the mood of the market is. We've got the key market moods, and we want to try to summarize that in a sentence or two. Okay, so this is over to you guys now before we start looking forward. Is in the comments section, in your questions section, start to write down, could you summarize what the sentiment is in a sentence or two? Have a go at doing that. I've gone through some of the most influential market news over the last few sessions. How would you summarize that into a sentence or two? Have a go. Just write it down in the questions. Don't worry, it doesn't have to be a perfectly constructed sentence. Just get some of the big ideas that you've got from those last things. Just put them in the questions or the chat. Yeah, okay, that's great. Okay, I think we're struggling with that. Okay, yeah, Nadir, excellent. You're bang on the money there, Nadir. We'll move on to in fact, that's going to be better just to identify the key currencies. So this is really what we want to do is when I'm saying summarize a sentiment in a sentence of two, what I'm really trying to get at, and this is something that Nadir's just gone straight to in the question section. Thank you, Nadir. Is we're trying to identify strong and weak currencies. Okay, so Nadir has said we've got a weak euro and a stronger CAD. Okay, so that's excellent, Nadir. That's two currencies that I've got. One weak and one strong. There's another weak currency as well, that stands out. Can you tell me what weak currency there is that's standing out at the moment in just the last few sessions? Okay. Okay, good. Let's have a look here. We've got some answers in. Great. Nadir, yeah, we've got some weak US dollar. Tribuvan, we've got some weak US dollar. That's right. That's good. Now, a lot of that is following through from the HYCM manufacturing index and Jerome Powell's dovish tilt from last Friday. So we are seeing weak US dollar. That is definitely the case. Yeah. The one we've also got that's weak and has got constant sort of weak sentiment in is the pound. Okay. So when we're putting those together, the standouts that we've got is we've got the weak euro, we've got the weak pound, we've got the weak US dollar, and then we have potentially a strong CAD. Okay. So what you want to do now is pair up the weak and the strong currencies and write them down. Because what you want to do, we want to trade weak currencies against strong currencies because that's most likely to have the most obvious directional move. Okay, if you think about if one currency is strengthening and one currency is weakening, then obviously you want to trade those against each other. So what currency pairs do you think it may be good to look at? Now, there's a slight trickiness with the US dollar. Obviously, the pound and the euro, the most the liquid pairs are the pound US dollar and euro US dollar. Now, with them both being weak, that's going to be sort of two-way action on there. But in terms of longer term moves, the pound US dollar and euro US dollar are interesting because of the strong sentiment that there is for a weak euro and a weak pound at the moment. So that's the only exception to our general rule there. So if we started to think, what kind of pairs might you be interested in trading? Just pop it down in the questions there. It is a harder day today, and I can see why there's a bit of a slowness. Okay. Yeah, Nadir, EuroCAD. A EuroCAD sell makes sense. A pound CAD sell makes sense. Excellent. Yeah, sold. Good observation. Chibivan US dollar CAD. Yeah. Yeah, a US dollar CAD sell makes sense as well. The only thing for us to be aware of now is some looking forward. So of course we want to look forward before we go to the charts. So looking forward, we see that there is some data that's due to come out for Canada. Okay, and that data has just come out. And what we have is we have it down. I'm just looking at the trade balance is minus 2.06 billion. Just looking at my Reuters feed here. I've got the Canada November exports down 48.33 billion, down 2.9% from October's 49.77. We also have November imports down 0.5%. So imports, as I'm looking at the data coming, are down across the board. So that might skew the pitch for Canadian strength for the next session. So I would just step aside from anything with the Canadian dollar for now and focus on something like the euro US dollar and the pound US dollar for a medium-term swing trade. Because as I'm looking at this situation, let's just go to the chart and see how that's reacting. So okay, so there's not much reaction to that trade balance. This is the pound CAD pair. Okay, what we can see is what we can see is that the pound has been selling off against the Canadian dollar pair for some time. Now, that in part, this is something that I've wanted to flag up to you to make it really clear. And where is it here? It is this is the oil chart here. And you can see that the oil chart has been strengthening over the last few days. This is the daily oil chart. You see it's approaching that big 50 level, okay? Now, oil and US dollar Canadian dollar pair are correlated 96%. So when oil is going down, the US dollar Canadian dollar pair is going in the opposite direction. So they're correlated 96% in terms of their moves. So in other words, whenever you're trading the Canadian dollar, you always want to have an idea of what's happening with oil. Okay, so always have an idea of the oil charts whenever you're trading the Canadian dollar. So as the Canadian dollar, as the price of oil is rising, that'll mean the US dollar Canadian dollar pair will be falling. Okay, so have an idea of what you're doing. Yeah, that's right, Sol. It's not a secret as such, but it's a strong market correlation. Whenever you're trading Canadian dollar, always look at the oil price and what's going on there. Okay, so what we want to do at this point is, once we've got our bias, we want to start looking at the charts. Now, this week is slightly trickier than other weeks. And one of the reasons it's slightly trickier than other weeks is there isn't anything with a really clear direction. As part of the US dollar is quite mixed. We've just had that data out for Canada. So in this kind of situations, when things are uncertain or unclear, you just want to step aside. But what we can look at something slightly wider, a bigger time frame. And what we can see on a bigger time frame is we can see that the pound US dollar pair looks like to be sold in the near term. Okay, so we know the vote's coming out on the 15th of January. We know Theresa May hasn't easily going to be able to get the vote through. So that means there's any sort of upticks in the pound US dollar pair. So any US dollar weakness, which is what we're seeing, is a good opportunity to sell the pound. Okay, so even though the sentiment in the near term is weak for the US dollar, it's weaker for the pound. So you see what it says, look on the charts. How does the sentiment marry with the fundamental outlook of a currency? So you know that the fundamental geopolitical outlook for the pound is bearish. It's a sell. Okay, so even though the recent sentiment has been weak for the US dollar, and we're seeing a little bit of US dollar weakness, and you can see the euro was appreciating against the US dollar, the pound has slightly appreciated against the US dollar, but fundamentally we know that those rallies are to be sold. I hope that makes sense. And as we look at the charts, we think where would be a good place to sell the pound US dollar pair? Now, looking at this chart, okay, what I've done is I've put the weekly pivot points, and we have the 100 and the 200 exponential moving average on the chart. So if you were looking at that chart and we're thinking we want to sell the pound US dollar pair over the next few days, okay, where would be a really good place to look to sell the pound US dollar pair? Have a look at my chart here. Have a look on the daily chart and look what key levels can you identify that would be really useful. Can you have a look? Okay. I'm not sure what you mean by that, Sol, but look at these pivot points. These pivot points are respected levels in the market. They are, okay, I'll just have us look at that, 1.2775. Well, Chibavan, yes, you could trade it short from there, but if you did trade it short from there, you'd need probably if it was on a daily chart, you want to put your stop just above that resistance point there. Okay, so that's a possibility, but obviously the danger with 1.2775 Trib is that is pretty much where price is at the moment. And ahead, there's some pretty key resistance levels. Okay, so we know we've got a weak US dollar. Let's just look at the dollar index. So we've got the dollar index is 0.28%. So there is a bit more dollar strength coming into the market right now. But we know that Jerome Powell's quite, backtracking the path of the Federal Reserve. So personally speaking, I think getting in too soon on the daily chart wouldn't make sense from a risk reward perspective unless you had your stop above those highs. But I would be concerned. I think the area which really looks good and we're talking about a medium-term trade. So this is not an intraday trade, because as I've said, today's quite a difficult day to spot a good intraday zone. So this is when you want to just step back and think, well, where would be a good place on a slightly longer time frame? And a good place would be the resistance level here on the weekly pivot point at this resistance line, which is also corresponds with the 100 exponential moving average. So do you see those two areas of confluence? That would be an excellent place to short. So I would suggest, like, take a screenshot of this, note down the level, have a look for yourself, make a mental note. I want to look at the 100 and the 200 exponential moving average and the weekly pivot points. I think HYCM have a service where they give these pivot points out. Have a look on the website, and you can see these levels. These are two levels to look at very carefully. And if you look previously, okay, look how the 200 moving average was respected here. The 200 moving average was respected here. And then we had the price moving up to the 200 average and sold down. So every time price has come up to that 200 moving average, it's sold off. It's sold off once, twice, 3 times. Okay, that's a key tell. And remember, we're trying to preserve capital as much as possible. So yeah, that's right, Nadir. You've got it. That is the first level to look at, that 100 exponential moving average. And you see, it offers a very good stop, because you could put your stop just slightly the other side of the 100 moving average. And what you want to look for is if price moves up to that 100 moving average and rejects down, that's a good indication that further lower prices are ahead. And then, the first target would be this pivot point here. You can see a similar instance where that happened was here. You can see that price moved up to the 100 moving average and price was rejected. And that's a good indication that lower prices are ahead. So you could have entered a short here with a stop just above that resistance level there, and then you're playing it down either to the pivot point, which wouldn't make sense for risk reward. In this case, it happened to go down all the way down to that support level on the following week. Okay, so that's something to have a look at, and that is the pair that has the most interest. So looking at this week, selling the pound US dollar. Now, you could do this in different ways, okay? Because you could also go to the pound CAD pair, give it sort of half an hour to see how the Canadian dollar reacts to that export data out of Canada, but also look at the price of oil. But you can go down onto the hourly pivot points as well, and you can see that on the intraday charts, you've got the 100 exponential moving, 200 exponential moving average is coinciding with a pivot point there. That will be another place to enter an intraday short with your stops just above the high. Now, as I said, this is not trading advice, and this is not a trade that I'm looking at doing, but this is the way you put that picture together, okay? It's the way you do these things. So have a look at that, make a screenshot of that, and you can see how it, how the trade plays out. And if you look at the pound CAD pair, you can see there's some falling on the pound US. That's with the US dollar strength for sure. If we look at pound CAD, yeah, here's the pound CAD pair. So you can see that on the pound CAD pair on a wider scale, you can see the price has rejected the 100, 200 exponential moving average and is falling down. So there's quite a lot of downside here. If the oil keeps rising and the Brexit sentiment remains, then a stop can be placed above the 200 exponential moving average, and you can play down into these key sort of support levels down here. Okay, that would be a very 1.6800 would be a very simple trade to make on that level. Okay, these are just trades that have good fundamental outlooks to them, and that's what you want to be looking, pairing stronger currencies with weaker currencies. I'm conscious that it's been a little bit trickier today. The market conditions haven't been as straightforward as I would like for explaining the situation today. However, that does form a very helpful introduction to the next issue we have, which is how many trades per month is an adequate frequency. In other words, what number of trades per month would be the right number to take, as it were. And the best way of illustrating this is the answer to the question is simply, it depends. And that might sound like an unsatisfactory answer, but some of the most significant factors which determine the amount of trades to be taken each month include things like the market dynamics, the trading time frame, and the entry style. So the first thing, the market dynamics. So just as all weather is not good for sailing, in a similar way, not all conditions are good for trading. Okay, so just like if you were out on the boat and there's a great storm that's about to come, you're thinking, well, do you know what? I don't want to sail today. It would be a mistake to go out sailing because I might end up with my boat being capsized. So in the same way, some market dynamics are clear and straightforward, and some are not. So as a general rule of thumb, if the market dynamics are not straightforward, if it's not clear, or if price is very volatile and you're uncertain of the trading dynamics, then the best thing to do to keep trading for a long time is to stay out of the market. Just leave the market to settle, wait for better weather, because the beautiful thing about the market is better weather will come, clarity will appear, and a straight course will eventually materialize. The market is continually providing opportunities. So in order to work out how many trades to be taken, then what you need to realize is, I want to be trading in a calm market, or if not a calm market, a market that I have a good grasp and a good understanding of. So here's an example of it. Okay, so this is the British pound US dollar pair on the 4-hour chart. Okay, now this was the end of last year, and we had the same scenario that we've had as I've outlined today. Theresa May was bringing her Brexit deal to the UK Parliament. It seemed doomed to failure. So the British pound was a sell on rallies. Okay, and you could see every time price on the 4-hour chart rallied up towards the end of December, moving end of November, start of December, you can see that price moved to the 100 moving average, sold off, moved towards it, sold off, moved toward it, sold off, moved toward it, sold off. Okay, so that would be a situation where that would be a very clear and straightforward place to be entering trades. And you might have had, I think you might have had one, you might have skipped that one because it doesn't touch the 100 moving average, 2, 3. You could have taken 3 trades there just on that one chart. And that's because the market conditions are good. Similarly, if you look at the British pound US dollar pair, you may have been looking at the pivot points on the 1-hour chart. You can see again that as price goes up, you can see here price moved off the 200 moving average on the 1-hour chart. You might have thought, I'll sell from there, put my stop above the resistance level, move down to the last pivot point. I've got here price at the pivot point, I'll sell off that pivot point, and price move down to the next pivot point. Similar here, similar here, similar situation here. So you might have had 1, 2, 3, 4, 5 potential trades on just that one pair. Okay, so what you can see is how many trades you take per month is dependent on the market conditions. Also, what time frame you're on. If you're trading on the 4-hour time frame only, or the daily time frame, we could have looked at the pound for the daily time frame. You might have taken, like just 1 or 2 trades. If you trade traded all of these time frames, you might have been taking sort of 7 or 9 trades just on this one currency pair. I think as a general guide, how many trades to be taking per month, there is no hard and fast rule, but something along the line of around, sort of 9 to 16 trades per month would be not unreasonable for intraday trading. Okay, you might be looking at that frequency. If you're trading swing trading, you may be looking at less trades per month. You may be looking at maybe 3, 6, 9, 12, a dozen trades per month. That's just as a rough kind of a guide, what I would be anticipating. Although some months you're going to have more, and some months you're going to have less, because you mustn't forget the market dynamics. I hope that makes sense. Yeah, Sol, there's more in your questions than we've got time to answer. The key thing with understanding moves in the FX market is the operation of central banks, because it's the central banks' monetary policy which ultimately drive the FX markets, and it's their response to the economic outlook of their nation. Okay, so to understand FX moves, we always look at central bank policy. That's one of the key things. So if you want to focus what's happening, just look at the central bank policy, and you'll get an indication of how they're responding to the currency, and you'll get an indication of what you can anticipate coming up next. Okay, guys, that is the end of our intraday analysis. And can I just urge you to take away the handout and use this handout, print it out. You've got it on your handout charts, and follow it on a day-to-day and a week-to-week basis. If you use it, you will find that it will help you in your trading. Okay, it will help you in your trading. Follow the same process that I've used, then come back here each week, and you can use the question panel to say, I found this hard, or I found this easy. We can look at it in some detail as well. So make sure you do that, and come back next week, and we'll have the same workshop again, and we'll go through it all again. And also, don't forget, I have the FX week ahead, which is 12:30 GMT on the Monday of each week, when we look at the most relevant market moves that are happening. Okay, guys, thank you very much for attending. I hope that's been helpful. The takeaway of today, again, not trading advice, but keep a close eye on the pound US dollar pair, particularly those 100 and 200 EMAs and the pivot points on the weekly pivot points. They're offering good value places. You're very welcome, Sol. I hope that's been helpful for you. Good to have seen you again. Nice. Thanks, Nadir, for your contributions, and Tribuvan, lovely. Good to see you again, Van, Joseph, Susan. That's great. Guys, thank you very much for coming. I hope you have a good week, and I look forward to speaking to you again. Yeah, thanks, Trib. Thanks, Nadir. Take care, guys, and I hope to see you back again. Bye.